Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be faithful to that which exists nowhere but in yourself. Market-wise, let's take a look at it out here. We had the Dow Industrials up 34, Nasdaq up 13, S&P's up 5.5, gold contract up $10.30, traded $1,241 an ounce. Gold, folks, is building cars. Got big volume again today. That baby wants to get up and over its swing high. Silver up 21 cents, $14.97. Silver is still building cars to get to its October swing highs, and silver does need more volume. Wasn't bad out here today, but it does need more. Platinum was down $3 at $9.35 an ounce. Copper caught a bid once again, up 5 pennies at $2.18 a pound. Copper wants higher price. In fact, many commodities want higher price, folks. You got a commodity bull happening in spades right now. Oil up 48 cents, trading at $34.88 a barrel. Also, I suspect we're going to build little cars here, far higher price in oil. Bonds, the 10-year note down 6 ticks, 129.13. 30-year bond up 16 at 162.27. And King Dollar couldn't handle higher price. King Dollar is trading out at a price point down 180 at 98.18. I expect that you're going to see King Dollar make its way into lower price once again. The euro is trading at 108, and the yen is trading at 113.38. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so yesterday, we take a look at the SPY. The SPY took its swing point out with volume. It did 141 million shares. It has been building cars to get up over the February 1st swing point. We're at 199 right now on the SPY. Now, bottom line, our benchmark out here from the low of December 18th is 199.83. Now, that benchmark, folks, has 251 million shares traded. That being said, what I expect, and this is no doubt, this is a benchmark across all the indices, but what I expect you're going to get here is this. Deviances are just awesome in the marketplace, folks. So what we did is this. We took the swing point out. We took it out with volume. We knew in order for this market to go lower, folks, everyone's got to get bullish. That's just how markets go. Bottom line, if we take a look at this S&P and we pull it back, what you're going to see is this, is that your first downdraft in this marketplace, and, you know, markets basically, people forget how fast markets go down. Well, in August, we were trading out at 210. We go down to 182, fast, furious. Guess what? Come all the way back topside to get everyone bullish again. We go to 211. We're at 211 in November. It hangs up there for a month and a half, 2 months. Boom, goes all the way down to 181. There had to be something to get everyone bullish again. We got it. What do we get? You basically crawled all the way back topside. You took a swing point out yesterday with volume. Now what I expect you're going to see is that this will not only get into the 199.83, you're going to see it go by it. There's a gap higher at 203.87. That's where I expect you're going to see this thing go. So I wouldn't be throwing the switch on the short position just yet. NDX 100. What do you have with the NDX 100? That was a flat market up 4 cents today. You had already taken out your B point. You took it out with volume yesterday. NDX 100, December 18th, same swing, 109.83. What I expect you're going to see, though, more than likely you're going to get up to that gap of 111.84. Gold, what do we have with gold? Bottom line, folks, gold wants higher price. It's been building cars. We've done 174,000 contracts out here. We still have 2 days before the end of the week. Now, 1263.90 is the high in this contract. That was established on the 11th of February. I suspect by Friday we're going to be going after this. The real kicker is we're going to get it. If we get it with volume, guess what? You're going to have $1,400 gold. You don't get it with if it's with lighter volume and it fails, you'll be right back down the other side of this market, which would be 1191. I do expect we're going to get it, though. Why? Because many of the commodities, folks, are moving, and they are moving with conviction. You had copper up 2% today. Sugar was up 1.9. Nickel was up 1.8. Silver was up 1.5. Crude was up 1.2. Wheat was up 9/10. Bottom line is it looks to me like we got a commodity bull coming off vicious lows in some of the commodities. Bonds. What do we got the bonds? We take a look at the 10-year out here. What you have with the 10-year is this. Now, you got to remember something. Yesterday, the bond market got smoked. Big time. Wide price spread, accelerated volume. You really had a flat market out here today in bonds. What I expect you're going to do is you're going to build some cars to get to what? To get in a lower price. Where the subtleness comes in the bond market is this. We had volume today in this 10-year. The 10-year did 1.3 million contracts. That's big volume, folks. They're unloading these things. So the 10-year, I suspect, wants to get down to the 128.20 one area. Now, if we go over to the 30-year, and we take a look at the 30-year, this is what you have. Inside the 30-year, you got into a low, you rejected that low, and you did have lighter volume. And this is really cool, folks. Okay, so what is that? Well, that's a little divergence. Yesterday we came down with 305,000 contracts. Today we did 249. We rejected it, and we got it back inside it. What does that mean? Well, one of the tigers in the den. If you haven't tested over the tiger's den, folks, great trading room. Okay, and one of the tigers in the den, he just came up with this, and it's so cool because you're gonna love this. When he came up with it, I'm short bonds, and the guy says, you know what, man, I'm gonna take a few of these contracts off at the close. And what he was looking at, I gotta get this because this is so cool what he said, and it's the truth. Because I was looking at the difference between the 10 and the 30 out here was like, okay, man, what's going on? And what he said is an interesting divergence between stocks and the 30-year treasuries. Bonds sold out for now with negative yields everywhere else. Where are you going to go for safety? And in that context, okay, I think he's got something there. And specifically what it is this, is that the market itself, to me, wants to go higher on a short-term basis. Then bottom line comes down dramatically. Looking at the 10 and the 30, very well, we might get a little bounce in the 10 and the 30 tonight. Shot them a little bit more, and what that would be saying overnight, you know, you're going to get high volatility overnight. I do expect that what we are going to have, though, is higher prices. Tomorrow, we might have them Friday, and next week may be the time that this thing wants to go south and go south in a big way. You stay right there, folks. We'll come right back. Dow finished up 34, NASDAQ up 13, S&P's up 5.5. We're going to be right back.